Good afternoon. This is Craig Moddelmog for the week of March 27th. Actually, today is Friday, March 27th. Wall Street X's and O's. It's been a little while and crazy lately. As you can see, I'm in my coronavirus apparel today, which is jeans and my KU t-shirt and my COVID-19 haircut. I was supposed to get my haircut the Friday before they shut everything down. So, see, the market just closed. Oh, fantastic. The Dow closed down 930 points. Anyway, back to my story. I was supposed to get my haircut on Friday, and they shut down all the hair salons. So Vicky had to call me. So Vicky, if you're on here, hey Vic, hope you're doing well. And Tanya gave me a buzz cut. So, this is the COVID-19 hairdo. I'm hoping to make this famous. So anyway, I would like to say that all of the opinions, comments, and whatnot on this show, I guess you could say this is a show. I guess I've been doing like 6 or 7. It's a show. I like that. This is uncut and unedited for you that are tuning in the first time. So, and you will see that here shortly, that sometimes this is just bad, but we have a lot of fun with it. I hope everyone's doing well. I hope we make people laugh. We're also hoping just to really focus on the facts and help people become better investors. That's really what my goal is. But anyway, back to my disclosure, because the SEC and powers that be require that I distribute that, of which at the end, you'll see it down here on the bottom, although it might be on this side. It's on one of these sides at the very end. You'll see my face pop up on one and my disclosure pop up on the other. So make sure you read that. I will not be testing over it, so don't worry about sharpening your number 2 pencil. Anyway, getting on here. Life is very interesting. For those of you who know me, know that is probably the most word that I use the most. And because it's interesting, it can mean lots of different things. It can be interesting good, it can be interesting not so good. So it's just a good word. Things are interesting. We have a couple things going on. We obviously have a coronavirus challenge that's challenging the world. It is a serious deal. How serious? I don't think we know, but it's serious. You have to pay attention to that. I actually have a client whom has basically gotten this. Their kids got it, and they've been in quarantine. They said this is one of the worst things they've had. So it is definitely not something to mess around with. We also have an oil tiff going on, and I say tiff with lots of sarcasm, between Russia and Saudi Arabia, to where they're trying to drive oil to zero. I personally think that they're in cahoots trying to drive as many American oil companies out of business as possible. Because if you think about it, the U.S. went from being dependent on Saudi Arabia, although they're our friends, right, and Russia for oil, to where now we're the number 1 oil producing in the world, number 1 oil producing nation in the world, or at least one of the top couple, if we're not the top. So I think they're unhappy with us, and that is their bread and butter. That is actually their only piece of bread with butter on it. So they're not happy. And I think they're trying to drive oil down as far as possible. So we have that little thing going on, which when you put both of those together, that is what you call more an event-driven market type of pullback, or market correction, market bear market. Actually, it's an event-driven bear market, of which now we're starting to await what the impact on the economy is. Here's the deal. It's not what the market should be. I think a lot of people, the market should be doing this, or the market should be doing that. No, you make decisions on what the market is. Okay, and as you know, I'm a big guy. I look at the numbers don't lie. The math doesn't lie. My Uncle Dennis out there, math teacher Denny, hey, math is it, man. The math doesn't lie. So we're going to focus on the facts today and really dial in to try to give you guys some good meat, okay? What has happened here in the last week is this. We had unemployment come out yesterday. The market was expecting about 1.2 to 1.5 million unemployed. It was 3.2, just missed it by, as Maxwell Smart would say on Get Smart, missed it by that much. Jiminy Christmas. Unbelievable. lots of unemployment. That in itself is going to force a consumption-based recession or a jobless recession. Here's why. You got a lot of people not working, okay? And throw this bill out the window. No offense. My wife, who's an accountant, not by trade, and then my son, who is an accountant, Seeger, what's up? He works for Ernst & Young right now. We were actually powwowing last night at about 9:30, breaking down this bill. Here's what this little bonus check that they just voted on is. This is actually a pre-refund, okay? They are selling it as a tax credit. False. It is a pre-refund of your tax refund next year based on taxes, based on your income this year. So those of you who get that, okay, basically what's going to happen is come next year when you file your taxes for 2020, they're going to say, oh, you were supposed to get $1,500 in tax return because that's what you've paid in. Well, we already gave you $1,200, so we'll only give you $300. Or another scenario, oh, you're going to get a tax refund of $900. Well, lucky you, you got $1,200, so they're not going to ping you. At least we don't think. I think somehow they're going to work it in. It's like Obamacare. Oh, don't worry, we're cutting you a deal. No, we're not. We're going to put it on your taxes on the other end. It's a rip job. Anyway, sorry to get on my little grandstand here. I promised one of my clients today that I was going to chill and not be sarcastic. You know who you are. I'm really trying. Okay, I swear I'm not trying to be sarcastic and obnoxious. Sometimes it's just hard. So anyway, we got a lot of things coming out. Here's what concerns me, okay? The last 3 days, we had a big rebound in the markets. It's bogus, okay? I'm going to call the full bull on this. Here's why. One, do I think the market was oversold? Yes. Here's the problem. The program traders have had a day the last 3 days. Program traders are all the computer traders. They're all built on algorithms and momentum and whatnot. They have been having a heyday with this volatility that's been super high for a while, okay? That has added a lot of gas to the flame, as I would say. They're standing over the fire pit going, wonder what happens if I squirt this. Wow. That's what's happened the last 3 days. You can't buy this, okay? I've had people buying into this. I don't think you should be buying. You are speculating, and we want to be investors, not speculators. So here's my 2 cents worth. 70% of the time when you enter a bear market, 7 out of 10 times, the market will go down and retest the lows. Okay. What's fascinating is that with the numbers that we have had, there are only 2 other times in history. 2. One is in 1987. You know when the other one was? 1929. That's the Depression, people. Okay. We have 2 times in history where the market has sold out 30% to turn into a bear market. 2 times in the history. Okay. Of which, when I'm looking at the charts on this deal, in both cases, they went down and retested lows. So for all you people who bought this week, I hope you have some cash because it will get cheaper, okay? If you bought things this week, it will get cheaper. I promise. I promise. You can write that down. If I'm wrong, you can call me and say, Craig, you were wrong. And I'll be like, whatever. I thought I was right. So anyway, lots of challenges out there. Here's the big challenge. None of the bad news is hit, people. Do you realize that? This coronavirus gig is just getting amped up. And I'm going to be very long today. I'm already 9 minutes in. Holy crap. Wow. It's going to be a long one today, but you guys are going to be good on this one. Here's what's happening. The bad news has not come out yet. Okay? The numbers on this coronavirus gig are just getting fired up. Okay? We're starting to see numbers. What's going to start happening is we're going to start seeing really the impact, which is how many people are dying. Not to be morbid, but at the end of the day, that's what shocks us, you know? It's when you get that number from Italy where 800 people died in that day. I remember walking in home a couple days ago, and Tanya had the TV on, and there were all these army trucks driving down the road in Italy, and Tanya's like, yeah, all those trucks are full of caskets. I'm like, what? 800 people in a day. They're really being decimated over there. Okay, lots of people are dying. What's going to happen here? I don't know. And I'm not trying to breed fear or content, but it's just, again, looking at facts. So we don't know really what that impact is. Second, we don't know what the economic impact is. Okay. We've seen this total crater of unemployment, which, by the way, yesterday's number was the worst number we have ever had in the history of this country. Prior to that, I'm going back, the number I'm seeing here goes back through the late 60s, and the worst numbers of unemployment were barely over 1,000,001 and change. We were 3.2, okay? We don't know what is going to happen, of which, to me, these bounces we've had should have been used to either free up cash, pull equities off the table, and go more conservative. That's what I've been doing. Okay, so for clients of mine, if you're my client, I've been spending the last 3 weeks taking opportunities to pull risk off the table and de-risk portfolios, for the mere fact of there's so much uncertainty out there, I don't want to guess. Okay, you can't guess during times like this. Here's some other interesting facts. Again, big fact guy. Hold on one second here. Fact guy. Cheesecake Factory, who's been there? I have, loved their cheesecake. It's killer. Did you know that they can't pay their rent right now? That's kind of interesting. You're seeing restaurants shut down. You're seeing big box retail stores shut down. They're just closing their doors during this time. You're seeing small retail shops shut down. I went to my coffee shop, my little local shop this morning, because I was out of coffee beans. I went in there and they said that they're closed during this coronavirus deal. I had a temporary heart attack, and I drove to Starbucks over by Timnath, and they were closed down. I did have a heart attack. I called Tanya and I drove back home because I had some coffee in the freezer, because I am really not very fun to be around unless I've had about 5 cups of coffee, as my daughter Lizanne would feel that. Lizanne, peace out. She's my coffee drinker. CJ, my son, my coffee drinkers. Love them. Anyway, I also think in the midst of checking our emotions at the gate, okay, which is what we really have to do, I also think some challenges are corporate credit bubble. What that means is we've had such low interest rates for so long that companies have been going out and taking out debt after debt after debt, issuing more bonds and more bonds, of which at these low rates, well, here's the problem. You got a lot of bad companies that are really in debt. That's a bad combination. I think that's another challenging thing. Another thing, mortgage purchase applications, okay? There's a title company right next door to me. You know what I've been noticing the last week? Slow. They went from ripping and roaring to slowing down. That number, the mortgage purchase applications for the week have dropped 29% week over. That's the worst number since 2008, people. That's not a good number, okay? Not a good number. Volatility stays high. The VIX today closed at 65, is up 4.6%. Here's the deal. There is not a money manager that has a brain on the planet that would say, I think it's a good time to buy stocks because I can make money when the VIX is high. When volatility is high, people, you don't buy stocks. Why? What causes volatility to rise? Fear, all right? I don't see fear dropping anytime soon. So this market's going to churn and burn, and which you want to be a spectator. Another thing, oil volatility. When I started to see how I'm just like throwing stuff out of the way, I'm just starting to get an attitude here. Oil volatility. This is crazy. Oil today closed at $21.55, 56 a barrel. I'm looking at it right now. The oil VIX was at 145 when I started today. It closed today at 175, all right? There's flashing lights going off everywhere, people. And what we need to do is we need to check our emotions at the door, like I said here a couple minutes ago, and we have to breathe, all right? You have to look at good fundamental investing, which is Warren Buffett-ish, which, is it okay to be nibbling right now? Maybe, maybe not. I mean, in a couple years, these are probably going to be good prices. I think things get cheaper, all right? If you work with me now, like I said, I've been spending the last 3 weeks pulling my foot off the gas, repositioning into high quality short-term government treasuries, high quality long-term government treasuries, a little scattering of high quality corporates, although very small, and then a very small piece of high quality international government debt. Okay. Outside of that, on the equity side, it's basically high quality blue chip stuff. I have no small cap exposure. And that's just the way it is. During times like this, you kind of hunker down. Okay. I am very defensively positioned, and I feel like that for now, that is what is going to be required in order to wait this out. We have to be patient. Okay, I want to encourage you all, though, that you know what, this too shall pass. I have incredible confidence in the United States and in the corporations in this country that they will figure it out. We figure it out. Okay, our government is going to, right now, they're in the business of writing blank checks. I don't care if it's Trump, Obama, Bush, fill in the blank, Clinton, they've all done it. Okay, rather than allow people to experience pain, which is an economy that works on its own, we're writing checks, okay? Writing checks only goes so far, okay? And all we're doing is going more and more in debt. That's a bad thing. So for now, the government's going to continue to write checks. That's what they're going to do. I think in the midst of that, we're going to start to see, A, what this virus is really going to do from an impact standpoint, and B, what it does to the economy. If you want to see President Trump with the deer in the headlights look, he sees what this is doing to the economy because people aren't working, and he sees the economy doing one of these, crash. He doesn't like that. Last I checked, it was an election year, and people like to get elected. That's the way we're wired. We play to win, okay? So this is a big deal. He sees that. That's why he's talking about putting people back to work, because he knows that it doesn't work unless people are working in this economy. And he's right. We need to work, but we also need to protect people, in which this is one of those catch-22s. What do you end up doing? I don't know. I'm not getting paid for that job, and I'm thankful for that. I pray for those people who are in decision-making situations in our country. I would encourage you all to do the same, because they need a lot of wisdom right now. This is a very tough time. We will get through this, though. This is going to be another page in the history book. That's it. So let's not way overdo it either. But in the same breath, we're going to be good investors. We're going to focus on the facts. We're going to buy high quality. We're going to own bonds, and we're going to own cash when we need to own cash, and we're going to be patient. Patience is a virtue, not just in the Heinz 57 ketchup commercial where they're pouring it out, singing the song, anticipation. So you can see me sing on this deal. That's how crazy it is. They're waiting for it's so slow that you're being patient because it's worth the wait. We need to be patient. We're holding the ketchup bottle. We need to be patient, people. So anyway, this is Craig Moddelmog for another episode of Cornerstone Wealth Management's Wall Street X's and O's. I went like 3 times longer today. Lots of good information, though. I hope you guys enjoy it. Today is Friday, March 27th, and I am out.